Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, friends, we are back in the world of investing, the world of market. That's right. We're on Investopedia today learning what are penny stocks. In a lot of the articles that we have previously read in our playlist, guys, if this is your first video, what are you doing? Go check out the other videos in the playlist. There are a lot of information, old videos. I'll say that one more time. There are a lot of informational videos in my playlist called Stock Market Learning on our channel. So check that out. Not right now. Right now we're learning what are penny stocks. But later, when you have nothing to do, you can watch those videos. So the goal is to learn to be an efficient, winning trader on the stock market. That is my goal, guys. I gave myself 1 year. This is 40 days of learning, guys. No, we are on day 43. Do not short yourselves to learning. So there's not much to go catch up on. You can go get caught up. This article today is by Chris B. Murphy. He's an editor and financial writer with more than 15 years of experience. It's reviewed by Samantha, another woman. I like it when women. And fact checked by Patrice. And I don't know if Patrice is a woman or a man. Patrice is kind of like Ashley. It's a name, or Lauren, a name that could be a man or a woman. So I don't know. Or Alex. I don't know. No picture of Patrice, so we don't know. But Samantha's a woman and Chris is a man. It's always reviewed by men. Why don't the women ever write it? Yarletta and Samantha, they review it, they fact check it, but they never write it. What's up, Investopedia? Why aren't women writing your articles? I need to know. Okay, so what is a penny stock, guys? We're always reading about penny stocks. What are they, Bread? You must be wise with your pennies, because if you are not wise with your pennies, they will not be wise with you. And then you cannot be penny wise. You're so funny, Bread. You're like a built-in laugh machine. So, we got the coffee today, guys. D for dinero, because you know that's what we're here for. It is espresso, straight out my little espresso machine. That's right. I made myself a shot of espresso, poured in some milk, and wham, bam, got the best coffee in the state. That's right, guys. So, I found a new kind of coffee, guys. Let me know what kind of coffee beans you drink. I may have found the best kind of coffee beans there are. So, what is a penny stock? A penny stock typically refers... let's read this first. The stock of a small company that trades for less than $5 per share. So, what is a penny stock? A penny stock typically refers to the stock of a company that trades for less than $5 per share. Though some penny stocks trade on large exchanges, such as the New York Stock Exchange, most trade via over-the-counter transactions. We just learned what over-the-counter transactions are, guys. You can go and bop over there and watch those. And if you need me to just tell you, over-the-counter transactions are not like the stock exchange where they're found on an exchange. They are a broker-dealer transaction, so between two people, not on an exchange. And they're more risky. OTC bulletin board or through the privately owned OTC market groups. There's no trading floor for OTC transactions. Quotations are also done electronically. The key takeaways. A penny stock refers to a small company's stock that typically trades for less than $5 per share. Although some penny stocks trade on large exchanges, such as the New York Stock Exchange, most penny stocks trade over the counter through the OTC bulletin board. While there can be sizable gains in trading penny stocks, there are also equal risks of losing a significant amount of an investment in a short period. So very risky. Excuse me, guys. I don't know why. Every time I start talking in the morning, my allergies just flare right up. It's crazy. It's like you guys are the cause of my allergies. Or maybe it's just talking. Okay. Understanding penny stocks. In the past, penny stocks were considered any stocks that traded for less than $1 per share. The U.S. Securities and Exchange Commission has modified the definition to include all shares trading below $5. The SEC is an independent federal government agency responsible for protecting investors by maintaining the proper and orderly function of the securities market. Penny stocks are usually associated with small companies with a lack of liquidity, meaning that there are very few ready buyers in the marketplace. As a result, investors may find it difficult to sell stock since there may not be enough buyers. Because of the low liquidity, investors might have difficulty finding a price that accurately reflects the market. Due to their lack of liquidity, wide bid-ask spreads or price quotes and small company sizes, penny stocks are generally considered highly speculative. In other words, investors could lose a sizable amount or all of their investment. Penny stocks often represent growing companies with limited cash and resources. Since these are primarily small companies, penny stocks are most suitable for investors who have a high tolerance for risk. And guys, this means you can lose and cut your losses and be okay. Some people, when they write these articles, they are aware that some people cannot handle a loss, guys. And you have to know that for yourself, and you have to prepare yourself for that. Nobody can prepare you for that. These articles try to tell people about risk tolerance and about emotionality, but if you cannot control your emotions, you probably cannot control yourself on the stock market. That is what we are learning, guys. Even if you are an emotional person, you can learn to control your emotions. You do not have to let them control you. So that is why it reminds you every single time about risk tolerance and which ones have high risk tolerance, because they don't want you just throwing your money away, getting emotional, and walking away. That is probably the worst thing to do on the market, guys. You know what I found about good coffee, guys? You have to sweeten it way less. Good coffee does not need as much sweetener. Thumbs up on that. So, typically, penny stocks have a higher level of volatility, resulting in a higher potential for reward, and thus a higher level of inherent risk. Investors may lose their entire investment on a penny stock, or more than their investment if they buy on margin, which means the investor borrowed funds from a bank or broker to purchase the shares. Investors should consider the heightened risk associated with penny stocks. For example, an investor should have a stop-loss order predetermined before entering a trade and know what price level to exit if the market moves against them. They should also remember, guys, even though you put a stop-loss to minimize your risks, does not mean a stop-loss is going to sell. A stop loss is not a market order, so it does not automatically go through. It only goes through if it reaches that limit and somebody wants to buy it. So stop loss orders set a price limit that once reached will trigger an automatic sell of the securities. But if the market is moving fast and that particular price is never reached, it will not trigger a sell. So it could drop and you would get stuck with that. You have to understand when you're investing that just because you have an entrance and an exit planned does not mean you will get to use said entrance or exits. Although penny stocks can have explosive gains, it's essential to have realistic expectations and understand that penny stocks are high-risk investments with low trading volumes. And low trading volumes, guys, goes back to that you might not have somebody that wants to buy it. You might want to sell 300 shares of a penny stock and nobody wants to buy it at that moment, which means you might get stuck with 200 of them and somebody only wants to buy 100. So, advantages and disadvantages of penny stocks. Due to their low volume, penny stocks tend to be more volatile than established equities. This means high opportunities for both gains and losses, and investors should be careful to understand both the risks and the benefits. Funding for small companies. Penny stocks do provide some small businesses with a way to access funding from the public. These companies may use this platform as a starting block to move into a larger marketplace. The high potential for growth. Also, since they sell at such low prices, there's room for significant upside. Some companies, such as Amazon, originated as penny stocks, but later grew into sizable blue chip companies. And remember, guys, blue chip companies mean what? I'll pop over there and I'll tell you. Blue chip companies are a nationally recognized, well-established, and financially sound company that has a large capitalization and trades on a major stock exchange. Blue chip. So the SP 500, blue chip, guys. So a blue chip is a nationally recognized, well-established, and financially sound company. Blue chips generally sell high-quality, widely accepted products and services. Blue chip companies typically have a history of weathering downturns and operate profitably in the face of adverse economic conditions, which helps to contribute to their long record of stable and reliable growth. So, blue chip companies technically mean that they've gained enough money to weather the storms. And that's pretty much what it is, guys. Think about it. If you are a private person and you have a little bit of money, if you have money to weather the storm and you make it through the storm, you're going to survive, right? But if you don't have money to make it through the storm, you might not make it through the storm, and then you're not going to survive. That's all blue chips are, is they have enough money to make it through these big, giant storms, like depressions and economic recessions and things like that. So, however, some factors exacerbate the risk associated with investing in or trading penny stocks. These securities are usually riskier than more established companies. Why do penny stocks fail? Well, you can watch this little video. It's 1 minute and 45 seconds on Investopedia.com. Penny stock later, guys, because we're not going to watch their videos on stream, okay? So, why do they fail? Lack of information available to the public. When considering options for potential investments, it's important to have enough information to make an informed decision. Always, guys, know your information, okay, for informed decisions. For some penny stocks, information on corporate performance can be very difficult to find. When this is the case, the information that is available about them may not come from credible sources. Stocks traded on the OTCBB carry the OB suffix in their symbol. These companies file financial statements with the SEC. However, companies listed on the pink sheets are not required to file with the SEC. As such, these businesses do not receive the same public scrutiny or regulation as the stocks represented on the New York Stock Exchange, the NASDAQ, and other markets. There are no minimum standards. Stocks on the OTCBB and pink sheets do not have to fulfill minimum standard requirements to remain available for sale through OTC exchange. Once a company can no longer maintain its listing position on one of the major exchanges, the company can move to one of the smaller OTC listing exchanges. Minimum standards can act as a safety cushion for some investors. When a company is not subject to higher standards, investing in that company becomes much riskier. So if they're going to go like for bankruptcy, there's no minimum standards that say they can't be on the OTC listing. So you might be buying penny stocks in a company that is about to go bankrupt and no longer be there. So much riskier, guys, because the information isn't there. So a lack of history. Many of the companies considered to be penny stocks could be newly formed, and some could be approaching bankruptcy. These companies will generally have poor track records or no track record at all. As you can imagine, this lack of historical information makes it difficult to determine a stock's potential. Liquidity and fraud. Stocks that trade infrequently do not have much liquidity. Remember, guys, volume makes liquidity. And if there's not being traded, that's no volume, no liquidity. Eek. As a result, it is possible that investors won't be able to sell the stock once it's acquired. The investors might need to lower their price until it's considered attractive to another buyer. Low liquidity levels also provide opportunities for some traders to manipulate stock prices. The pump and dump scheme is a popular trading scam to lure investors into buying a stock. Large amounts of a penny stock are purchased, followed by a period when the stock is hyped up or pumped up. Once other investors rush to buy the stock, the scammers sell their shares. Once the market realizes there was no fundamental reason for the stock to rise, investors rush to sell and take on heavy losses. Unfortunately, guys, I don't know if it was a pump and dump scheme, but this is what happened with GameStop. I will show you an example, guys. Pump and dump, GameStop. Let's pop to our Yahoo Finance and GME as GameStop. So go to GameStop ticker. Oh, come on, charts. Click on its chart. Okay, here's its chart, guys. Chart. and we look at 5 years. Not 5 years. 1 year? What's 1 year look like? Why did everybody trade on that day? So, it was down to $19 in 2022. What was it? Look at that. So GameStop had dividends at first. Dividends, 9-cent dividends. So way back when GameStop opened, it had dividends, but it was only at like $3. So it was a penny stock, right? Penny, all the way up until 2020. Penny stock, all the way up. So from 2018 all the way until 10 of 2020, for 2 years, this was a penny stock, guys. 2020, penny stock, all the way up until 2021. In 2021, January of 2021 is when it bopped up. It went all the way up here, guys, where? Why won't it go up here? $86 in 2021. And now it's back down to $32. So that's kind of what happened right here, guys. A lot of people bought it. They said an investor, GME. Let's see if they consider it one. Oh, no. Now it is called a pump and dump. Uh-oh. So they called it a short squeeze, guys, but I think it was a pump and dump. If that's the definition of a pump and dump, the pump and dump is a trading scam to lure investors into buying a stock. Large amounts of a penny stock are purchased, followed by a period when the stock is hyped or pumped up. Okay? That's the definition, right? So look at this right here. It was a penny stock. When did GME start on Reddit? Reddit did it. Oh, look, CNN's got a whole thing on it. So everything you need to know about a Reddit group, how a Reddit group blew up GameStop stock. But it was a pump and dump, guys, with Reddit. Reddit did the pump and dump. That is crazy. There is a group on Reddit called Wall Street Bets, guys. It's called R Wall Street Bets. And I have been reading R Wall Street Bets since I got interested in the stock market maybe 4 or 5 years ago. And it was a lot littler. But during the pandemic, guys, right in 2020, that R started buying. They started buying GME. And then they thought that they were shorting it, guys, short selling it. And then they put it all over Reddit, all over everything to buy GME. And all these people bought GME and they said that they were going to hold them forever. I don't even know what that means, but they said that they were going to hold them forever. They shouldn't have. They should have sold. They should have bought them right here at $7. They should have bought them at $4. And then when it went up here, guys, and they got everybody to buy these, they should have sold. They should have sold at $66. They should have sold again at $75. They could have sold at $57. And now it's down to $35. But they bought in at $7. You see this? That's called a pump and dump, guys. It's going back down now. You see where it's at because where's GameStop? Let's see their... This is crazy, guys, because what does GameStop do now? GameStop was about to close down, right? Wonder why it was down. What's happening to GameStop? Says, the GameStop frenzy on Wall Street has investors and much of the internet enraptured, not unlike a good horror movie. Everyone knows doom is just around the corner for some key players. A lucky few will emerge stronger and the monster might be subdued, but will ultimately come back for a sequel. Our AMC did it too. AMC was a pump and dump also, guys. AMC's back down at $4. let's look at AMC, because AMC was still going to close. AMC is still $4, so it's still a penny stock. Let's see their 5-year. 6 months, they're down. 5-year, what do they? See, this is the same thing, guys. They pumped it right here. $59 AMC. AMC used to give dividends, guys. This was back. The dividends, AMC could afford to give dividends, guys. We used to go watch movies. Look at this. It was at $34. It's set at $33. It wasn't that big of a deal. They got dividends because we used to go to the movie theaters. And then, as movies got worse, it dropped down. Look at that. AMC was not doing good. And this is about the pandemic hit. Pandemic. And people started going back to the movies. And pump it up. And now it's back down to a penny stock. So if you see what happened was all of those people from this article, shortstop, GameStop. So they had sluggish sales, so they short sold them. And then they bragged about it on Reddit, which has a lot of followers, guys. That Wall Street Bets has probably 1 million people that watch it. So then you told 1 million people about this, and out of those 1 million people, let's say 10% bought. So you have 100,000 people that bought stock, even if they can only buy $100 worth, $20 worth, $50 worth. This shot up, and then they dumped it, guys. They sold it at varying times. Some people made millions of dollars. Some people made $50,000, $60,000, $70,000 off of one trade, a pump and dump. And that is legal, you guys. It's legal. And that is why you have to know the market. Because if all these people, like, for instance, guys, people do this all the time. Don't feel bad. Not her. It might look horrible, guys, a pump and dump. It might sound like something that you don't want to do. But if it's legal and you have the news and a penny stock is at $9, if you would be willing to invest $1,000 into your child for summer camp, you're going to lose the money, right? Your kid gets wonderful memories. Why not invest that $1,000? Hey, I'm not saying take away from your child, but what's the difference between investing in a pump and dump and investing in your kid? That's something that literally, something that, guys, $1,000 is not that much money. How much money do we waste all the time? If you put $1,000 in right here, if you bought at $10, you bought $1,000 worth was 100 shares. 100 shares, right? And then you sold those 100 shares at $59. You will have made $49 a share. 49 times 100, you would have made $5,000 off of this. Or is my math wrong? That's what the handy dandy calculator's for, guys. So, if you bought 100 shares, yeah, $6,000, $5,900. So, I'm just saying, penny stocks, they are very volatile, but you can pump and dump, and other people should know about it. Once other investors rush to buy the stock, the scammers sell their shares. Once the market realizes there was no fundamental reason for the stock to rise, investors rush to sell and can take on heavy losses. The pros: they offer a place for small companies to gain access public funding. In some cases, penny stocks may provide a method to gain access to larger marketplace listings. And with a lower price, penny stocks allow for significant upside and share appreciation. The cons of penny stocks are they lack a liquid market with few buyers, perhaps even after their price has increased. And there's limited information available in the company's financial record. Also, penny stocks have a high probability of fraud and bankruptcy of the underlying company. Tips for investing in penny stocks. While penny stocks are volatile, there are some cautions that an investor can take to reduce their downside risk. One is to conduct proper due diligence. Since penny stocks tend to trade in venues with lower entry requirements, investors should take extra care to read the company's statements and ensure that the company is financially sound. It's also important to rely on reputable stockbrokers. While there are scams to watch out for, most of them are promoted by dubious emails and cold calls. A reputable broker should be able to provide high-quality written research to back up any investment claims. Finally, as with any speculative investment, never put in more money than you can afford to lose. While you may make a profit by day trading, the returns are much more steady with established large-cap equities. Can you make money on penny stocks? Despite the risks, penny stocks can be profitable for a cautious or thorough investor. The key is to avoid certain fallacies that are common among speculative investments, such as the belief that they have the opportunity to make large gains. While this is true, they are equally likely to score large losses. Another important fallacy to avoid is the low price fallacy, which holds that low price securities are inherently cheaper than high priced ones. However, this does not account for factors like market capitalization or liquidity. Even if a certain stock doubles in price, it may be impossible to sell a large number of stocks without causing slippage. Signs of scams. Though there's no foolproof strategy for knowing which penny stocks are fraudulent, the SEC recommends that investors heed the following warning signs in a company's record: SEC trading suspensions, large assets but small revenues, financial statements containing unusual items in the footnote, odd auditing issues, and large insider ownership. All of those are scam signs. Real-world example of penny stock scams. California resident Zirk Demacion created nearly half a dozen shell companies and offered them as penny stocks to investors between 2008 and 2013, according to the FBI. Demacion told investors that the companies engaged in a variety of businesses, such as gold mining and diamond trading, when in fact they did nothing. He sold the stocks in boiler rooms, offices where brokers use high-pressure tactics to push people into buying stocks by promising large profits. In 2015, Demacion and 7 other perpetrators were found guilty of securities fraud and sentenced to federal prison, as they should have been. You guys, I am never telling you to take advantage of people. I am telling you to take advantage of systems. These systems that I am telling you to take advantage of were put into place in 1892 with the Buttonwood Agreement. Things that protect investors from fraud, from people like this, the SEC, the FBI, things like that. They were put in place to protect people with money. So what do you want to become? A person with money. I am not telling you to fraud people with money. I am telling you to become someone with money. And in order to become somebody with money, you first have to what? Learn. And second, you have to act. So we have to erase our emotions on money and act, okay? I'm not telling you to go to federal prison because you're frauding somebody. That's no good. How is a penny stock created? Small companies and startups typically issue stock as a means of raising capital to grow the business. Although the process is lengthy, issuing stock is often one of the quickest and most effective ways for a startup company to obtain capital. A penny stock, like other publicly traded stock, is created through a process called an initial public offering, or IPO. To be listed on the OTCBB, the company must first file a registration statement with the SEC, or file stating the offering qualifies for an exemption from registration. It must also check state securities laws in the locations it plans to sell the stock. Once approved, the company may begin the process of soliciting orders from investors. Finally, the company can apply to have the stock listed on a larger exchange, or it can trade on the over-the-counter market. So if you guys are starting a small business, it may be very good to learn about IPO, initial public offerings, so that you can be listed with the SEC and get your company some money, guys. So not only are you learning about the stock market, you're learning about the other side of the stock market. How can you grow a business with the stock market? Underwriting penny stock. As with any new offerings, the first step is hiring an underwriter, usually an attorney or an investment bank specializing in security offerings. The company's offering either needs to be registered with the SEC, according to Regulation A of the Securities Act of 1933, or file under Regulation D if exempt. If the company is required to register, Form 1A, the registration statement, must be filed with the SEC, along with the company's financial statements and proposed sales materials. The financial statements need to remain available for the public to review, and timely reports must be filed with the SEC to maintain the public offering. Once approved by the SEC, orders for shares may be solicited from the company public by a company's sales materials and disclosures, such as a prospectus. What's a prospectus, guys? A formal document required by and filed with the Securities and Exchange Commission that provides details about an investment offering to the public. Alrighty. Trading penny stocks. After initial orders are collected and the stock is sold to investors, a registered offering can begin trading in the secondary market by listing on an exchange like the New York Stock Exchange, NASDAQ, or trade over the counter. Many penny stocks wind up trading via over the counter due to the strict requirements for listing on larger exchanges. I think that the New York Stock Exchange costs $295,000 to list, and the NASDAQ costs $75,000 to list. And then over the counter is much cheaper, guys. So that's why companies may be over the counter. It's not all over the counter stocks are untrustworthy, guys. One day I may have a stock over the counter and I won't be untrustworthy. I'll just be a little business trying to make my way in the big giant world. Sometimes companies make an additional secondary market offering after their IPO, which dilutes the existing shares but gives the company access to more investors and increased capital. Furthermore, it's mandatory that the companies continue to publicly provide updated financial statements to keep investors informed and continue to be quoted on the over-the-counter bulletin board. Regulations for penny stocks. Penny stocks are considered highly speculative investments. To protect investors, the SEC and Financial Industry Regulatory Authority, FINRA, have rules to regulate the trading of penny stocks. All broker-dealers must comply with Section 15H of the Securities Exchange Act of 1934, and the accompanying rules must be eligible to handle penny stock transactions. So, according to that, the broker-dealer must approve the investor's transaction and make sure the investment is suitable for their purchase. They must provide the customer with a standardized disclosure document. This document explains the risks associated with buying penny stocks, customer rights, and solutions in cases of fraud. It requires the broker-dealers to disclose and confirm currently quoted prices before completing a penny stock transaction. It states the broker must tell the investor about the funds the broker earns from facilitating the transaction. So any fees have to be known. Brokers must send monthly account statements that include details of the number and identity of each penny stock in the customer's account. These statements must explain that the penny stock has limited market liquidity and provide an estimate of what they think the shares are worth in this limited market. After-hours trading. Penny stocks can be traded after hours. And since many significant market movements can happen after exchanges close, penny stocks are subject to volatile fluctuations after hours. If penny stock investors execute, buy, or sell trades after hours, they may be able to sell shares for very high prices or purchase shares for very low prices. However, even the best penny stocks are subject to low liquidity and inferior reporting. Also, if a penny stock does spike after hours, an investor looking to sell the stock might have a hard time finding a buyer. Penny stocks infrequently trade, even more so after market hours, which can make it difficult to buy and sell after hours. When is it not a penny stock? Multiple events can trigger the transition of a penny stock to a regular stock. The company can issue new securities in an offering that's registered with the SEC, or it can register an existing class of securities with the regulatory body. Both types of transactions automatically require the firm to adhere to periodic reporting, including disclosures to investors about its business activities, financial conditions, and company management, unless there is an exemption. These files also mandate 10Q quarterly reports, the annual Form 10K, and periodic Form 8K reports, which detail unexpected and significant events. In some instances, there are additional conditions that will require a company to file reports with the SEC. Reports must be filed if a company has either at least 2,000 investors, more than 500 investors that can't be categorized as accredited investors, and possess more than $10 million in assets. Usually companies with no more than $10 million in assets and fewer than 2,000 recorded shareholders don't have to adhere to reporting guidelines under the SEC. So really little tiny companies, guys, you might not even know what's going on. Interesting enough, some companies opt for transparency by filing the same type of reports that other, perhaps more reputable firms are required to do. And that to me is not interesting. I would be completely transparent and provide everything that everybody else provides if I was on the up and up, because I would want people to trust and buy more, right? So companies that don't do that, most likely something is wrong. Either they don't have enough manpower to provide that same type of report, or they're doing shady things and they can't provide that same type of report. So example of a penny stock. Most penny stocks don't trade on major market exchanges. However, there are some large companies based on market capitalization that trade below $5 per share on the main exchanges like the NASDAQ. For instance, AMC, guys, AMC is at 4.6, so $4.60, and it trades on the NASDAQ, right? So it's a penny stock. One example of a penny stock listed on the NASDAQ is Catalyst Pharmaceuticals, a small biopharmaceutical company based in Coral Gables, Florida. As of January 7th, 2021, the stock price is $3.55 per share. Let's see what it is right now, guys. This was in 2021. Let's see 3 years later what they are. I'm going to go back and put it here in the ticker. So it's at $11, yeah. Yay, it's no longer a penny stock. So when did it not become a penny stock? So like way back in 2021 after they wrote this, it just went back up. Good for it. So in the last 12 months, the share price has fluctuated between $2 and $5. On August 10, 2020, the stock closed at $4.26. However, the next day, the stock price fell to $3.34, a drop of nearly 22%. Although there can be sizable gains in trading penny stocks, there are also equal or larger risks of losing a significant amount of investment in a short period. Where do you buy penny stocks? Penny stocks are traded on the OTC Bulletin Board or the OTC Markets Group. They're also available to trade through a brokerage account, such as Fidelity or Charles Schwab. How do you buy a penny stock on Fidelity? You can buy penny stocks on Fidelity by searching for companies that trade for less than $5 per share. Note that those trading penny stocks must first submit a form acknowledging that they understand the risks of penny stock trading. How do you find penny stocks on Robinhood? You can find penny stocks on Robinhood using the search function and setting a filter for those companies trading for less than $5 per share. Note that since Robinhood does not charge commissions, penny stock trades can be potentially more profitable than a commission-based broker. The bottom line, and you guys remember on Robinhood, it is commission-free, right? They do not charge a commission like a broker. And it's very easy to get a Robinhood account, but let me remind you that in the last several years, during high trades like GameStop and AMC, they stopped all trading on Robinhood. Not on the market, on Robinhood. They stopped people on Robinhood from being able to make trades. So just always remember that. The actual broker that you're using, even if it's a free broker like Robinhood, they control when you can actually trade, guys. They can shut that down. So you have to remember with your broker how notable it is and how fair they are. The bottom line, penny stocks refer to shares in companies with a low price and low trading volume. Because these markets have low liquidity, there's also high volatility. This means more opportunities for large profits or losses. So that is a penny stock, my friends. Let us bop over here. Everything you need to know. And check out Yahoo Finance News. Anything new? Apple hits record high ahead of key headset launch. SEC sues Binance CEO Zhao over alleged rule breaches. See, that's what we were just talking about. SEC, they'll sue you. Tesla price cuts and incentives seem to be having desired effects. Is succession overrated or a cultural milestone? Hilton's extended stay portfolio hoping to tap into traveling workforce. Extended stay. Directors reach deal. Writers' strike goes on. How? Pause you. The Directors Guild of America reached a tentative deal on a new 3-year contract with the Alliance of Motion Picture Television, which bargains on behalf of studios. The agreement reached over the weekend includes gains in wages and benefits, a 76% increase in foreign streaming residuals, a groundbreaking agreement confirming that AI is not a person and therefore cannot perform the duties of the members, and the banning of live ammunition on set after October 21st. Oh, you mean they're going to ban it so that people can't get off on murder? Yeah, right. They'll just put it on somebody else, guys, so that the actors never, like the banning of live ammunition on set. But if it does get brought on set, it's the weapon person's fault and they will go to jail. They're not going to go to jail. But why aren't they still writing? I don't know. Palo Alto Networks. Investors are betting the stock market will return to normal. They're so wrong. People need to stop thinking about the good old days. The good old days have never came back, guys. Think about everybody that said it. Our grandparents said it. Their good old days never came back. Our parents said it. Their good old days never came back. Now we're saying it. We got 40-year-olds saying, oh, I remember the good old days. Well, they're never coming back, guys. Never. The good old days are not the good old days. They're just the old days. And they're never coming back. So just be happy with what you have right now. Okay? And make it better. Make it the good old days of today. AI points when to get in and out of stock. A Wall Street trader made a $7.5 million win to fill. Who? Who was it? A debt-ceiling deal surprisingly greenlit the Mountain Valley Pipeline. A trader bought 100,000 call options on the pipeline's owner days before that was announced. The identity of the mystery trader is unknown, and some think it's an insider trading concern. Really? They think? The guy bought 100,000 call options. I wonder how much he made. One of the surprise concessions that made into the bill was approved of the Mountain Valley Pipeline, a 304-mile natural gas connection from Northwest Virginia to Southern Virginia. Man, Manchin is a real turd ball. What was the deal? How much did he make? How much does this guy make? They're making it seem like 100,000 puts. Guys, he could have made $1 billion. Why can't I read this? Oh. How much did he make? Essentially bets on an increase. Essentially bets on a stock price increase. Following that announcement, it jumped 49%. Whoa. He earned $7.5 million as of last Friday. Options are still outstanding. So that number could grow if it continues to rally. That kind of perfect timing is, needless to say, fishy. The deal on Mountain Valley was kept secret up until the debt deal was announced. Some are suspicious enough they want it investigated. They really? I do too. They're not going to do anything about it. We're going to read about this later, and they're not going to do anything about it. Based on typical open interest and options for the stock and timing, it looks very suspicious. Whoever made the trade will have at least $500,000 in legal bills to deal with the SEC If found guilty, the trader will have all ill-gotten gains confiscated. May serve No, they won't. No, they won't. Yeah, you're right. Unless they're elected officials, no penalty, punishment, nor press will follow for the individual who leaked the information. I disagree. I think that if it's a government official, that whoever leaked the information is going to get in trouble. I agree with this. I think the SEC lacks the integrity to go after these types of deals, because if we Google politicians that made millions selling hospitality stock. Kelly Loeffler. That's the lady. In 2020, guys, that lady sold all of her hospitality stocks during the pandemic. Insider trading. The Stock Act. He and his wife sold stocks collectively worth $628,000 to 1.7 on February 13th. Stocks including as much as $150,000 in 2 hotel chains, Wyndham Hotels and Resorts Extended Stay. Her and her husband reported 27 stock sales beginning January 24th, worth up to millions of dollars. The Senate had received a coronavirus briefing the day her stock sales began. And she wrote, "Appreciate today's briefing from the president's top health officials on the novel coronavirus outbreak. These men and women are working around the clock to keep our country safe and healthy, and I'm working around the clock to make sure that 27 stock sales go through so I could get billions of dollars." Mrs. Feinstein said her assets were in a blind trust and she was not involved in her husband's financial decisions. Yeah, right. Because Mrs. Feinstein did not call her husband and say, "Husband, it's January." What day was it? January 24th. And they just said the coronavirus is coming. We better sell stocks because they're shutting down all hotels. Yeah, right. These people, millions of dollars, because you know what? They were briefed. January 24th, they were briefed and you were not. So they sold $150,000 worth of 2 chains for Wyndham Hotels, Resorts, and Extended Stays. How much did people lose? Not old Loeffler. That is insider trading to me, guys. And that is why our officials should not be able to have stock. While they're in office, they cannot have stock. You're in office. You get all other types of benefits. You do not need stock benefits. You get paid. You get a place to stay, you get an office, you get security, you get lots of stuff. You don't need it. I mean, you can do it when you get out, right? No. We just let our government do whatever they want, guys. We let them do whatever they want, and that is why they do whatever they want. Bill Gates makes billion-dollar bet on Heineken just before Budweiser controversy, threatening the beer giant's top ranking. Dutch company worth nearly $1 billion. When did Bill Gates buy it? You guys, I've always said this Bud Light thing is made up. They did not ask that girl, the Mulvaney girl, if she wanted that beer. They sent it to her as a 365 days as a graduation gift. Not a graduation, what do you call it? A year gift. I don't know, 1 year gift. She didn't ask for that. I think this was all manufactured. I promise you. The Bud Light thing, if we saw the back workings of it, it was manufactured. I don't know what side benefits the most, but Bill Gates benefited. And think about it this way. Bud Light was a certain type of beer, right? Certain drinkers drank Bud Light. Young children did not drink Bud Light. How many young kids drank Bud Light? They didn't, guys, right? Kids drink those hard, what are those things called? They were sending kids to the hospital because they had Locos, the Four Locos. Kids like those kind of things. And now what's like the Four Locos is it's called Smash. I don't even know who makes it. Who makes a Smash high alcohol beer? Who makes this? Hard Seltzer, a Fruit Smash. These are the kinds of things that young people drink. And let's see. Anheuser-Busch brands. What kind of brands do they have that are for young people, guys? Let's look. Budweiser, not for young people. Corona, not for young people. Modelo, not for young people. No. Maybe Shock Top? No. Bud Ice? What's Bud Ice? No. None of these guys. Where are their fruity drinks? Stella may be high end. Alasian, I give them to with Alasian because Alasian has all of the high alcohol ones. So maybe the young people are drinking Alasian because of that. But all of these beers, I'm not even trying to be mean, are old people beers. This Miller Lite, my dad drank this while he fished. Modelo, my sister's husband drank this when he kicked back and picked at his toes. Corona, same thing. Budweiser, Bud Light. These are old people drinks. Right? What does Heineken have? Heineken brands. Brands. What does Heineken have that's like children, that young people like? Oh my gosh. Remember me. This is stupid. Where's our Gerstern brands? I don't know. I don't know what's wrong with Heineken brands. Heineken, you're a horrible company. I get like kids like want to look and stuff, but like, my gosh, that was stupid. Heineken Old Brew, Heineken Premium Light, and Heineken Twerbock. But it's in other countries, so it's okay to support something out of country. That makes sense. But Bud Light, I think maybe they were trying to change their look, guys. Think about it. If you are the biggest beer, but you can't attract children, and by children, I mean under 30 years old, guys. If you can't attract the young people, then you're doing something wrong. They hired that woman. She said she wanted, that CEO lady, she said she wanted to increase sales with young people, and it seems to be that's where they were headed until they got all that bad karma. I don't know what it was. Bad talking about them. The world's typical billionaires, most likely just like Bill Gates, a 67-year-old boomer. That's a mean thing to say. Why you got to be a boomer entrepreneur? That's sad. Found that billionaires under 50 represent just 10% of the cohort, while billionaires over 70 comprise 40% of it. In general, women are underrepresented in the billionaires club, making up less than a fifth of the cohort, though they're slightly more represented in the groups of younger, ultra-wealthy individuals. Like Gates, who was once the world's youngest self-made billionaire, a majority of billionaires are self-made. The 50 to 70 age group makes up 64% of this cohort. But unlike Gates, who made his billions in tech, most billionaires, especially those 50 to 70, amass their wealth through banking and finance. Yeah, baby boomers had an easier road to riches. Well, I think that is enough news for today. We will go ahead and call it a day, and I will see you guys here tomorrow. This is the simulator, guys. Go sign up for this. We're going to practice buying and selling a little bit tomorrow. So if you do not have an account on Investopedia Simulator, you should give it a go. It is pretty helpful. What's that? News? Oh, they had an unresponsive Cessna aircraft flew into restricted airspace in Washington, D.C., triggering the launch of fighter jets. The plane. Hold on, guys. Just looking at an investigation made them do sonic booms. They shoot it out of the sky. A loud sonic boom could be heard throughout the D.C. region after two F-16s launched from nearby Joint Base Andrews in Maryland to investigate. The actual standards are classified, but there's a good bit of judgment involved. They decided not to shoot the Cessna plane. The plane was maintaining a constant high altitude and heading, meaning it wasn't seen as a threat. It had been owned by Encore Motors. His daughter, a granddaughter, a nanny, and a pilot. It says it was down, but so what happened to it? Man, news is so janky sometimes. Anyway, guys, we're going to call that a stream. Nothing exciting in the news today. I will see you all tomorrow, same time, same place. Be there or be square. Have a great day, neighbors, and enjoy all the time that you get in this wonderful world, because it always comes to an end, just like right now. See you guys later.